Welcome to the Traders Show. This episode is brought to you by Paperstone.
So hello traders, welcome back to another episode of the Traders Show. So today we're just two. One of our colleagues had some other engagement, so he couldn't make it for this episode. However, we decided to shoot the episode regardless and share with you some of the things that you guys have been asking us about. So today what we're basically planning to do is to answer a frequently asked question, which is, when do I know I'm ready to jump into live trading, and how much money do I even need for me to sustain myself fully from live trading? So many people normally ask that question when they're starting out in trading. It's sort of like the end of what most people would love, because most people, when they start out in their trading, the end in mind is, at some point I'll do this full time and I won't have to answer to anybody. I'll have to rely on my own, just use my laptop and make money from the markets. But it's not an easy journey to get to that point where you're that free, where you can be able to consistently make money out of markets without answering to anyone and without having someone who's asking you questions, especially if you're sorting your own bills. So we're going to try and shed some light on some of the things that you should think about. So we always like saying that we're just sharing with you the information that we have and the opinions that we have based on our experience. So you can combine that. It's more or less, like I always like saying, if you're listening to this podcast, this is more or less an exercise in thinking. What you're going to share with you is what you should think about, probably if you want to make a certain decision. And if you've thought about these things and you have framed them in the right way, then you can be able to make certain decisions. So that's what we're going to talk about today. But before we start, I'll allow my colleague to introduce himself.
Yeah. What's up, guys? So as Ken said, today we'll be talking about how when do you know you're ready to trade full-time and to take trading as a career. So many people never know. Many people just start trading and they think they can make money from whatever stage, but it takes time. These things take time, and we've been talking about this for the past few weeks, that trading really is going to take a lot of your energy, a lot of your time, sacrifice, in order for you to start trading full-time. So we'll give that sort of what requirements do you need in order to do that. Once you can achieve that, once you persevere, do that 10,000 hours of mastery, years of practice, deliberate practice, we talk about that a lot, not just practice, deliberate, is when you'll start seeing some returns. We've been following these few traders online. If you go to myfxbook, it's very easy to find some traders who have shared their system and their returns. So there's one person we've been following a lot. We found him, I think, about 2 weeks ago, and he's been having good stellar returns for the past since 2019. And this trader first got into trading in 2009. 2009 was the first time he took his first trade, and 2009 to 2019. Now, of course, between maybe 2015 to 2017, 18, he's been starting to be profitable, but he started sharing his myfxbook returns since January 2019. So if you can, maybe we'll leave a link below so that you can check out his stellar returns and see how professional people trade, just looking for about 5 to 10% return every month. He's not looking to make 100% per month. If you're still thinking that way, then you're not yet ready to trade full-time. You need to sacrifice and understand that in order to make returns, you're going to need a lot of capital, and then you're looking for those consistent, good returns. Okay, but that's pretty much it. That's what we'll talk about. Apart from that, trading week has been quite fine. I think this week I had about 2 trades that I had running. I lost on all of them, so I think I lost about 2.5% on those trades. That's about $250, which is quite normal in the markets. I was risking that $250 to make $1,000. I lost the $250. I was looking for about a risk reward of about 1:5. 1:4 there. If they went well in my way, because what really happened, markets have really changed me this week. I've been trading in the direction of the trend, and looking at the dollar, I've been seeing the dollar anticipating it to rise. If you're trading the markets yesterday on Friday, which was the 21st, this video will come out next week, markets really dropped. The dollar really dropped. So I had the US 30 market really shot up. I had a 1.5 risk percent on that one. And early on in the week, I think I had a USD card, which had just about 1% on that one. So that giving me about a total loss of 2.5% for the week. which is quite normal. So it's a normal fluctuation. So my account will be down that much, but I'm still looking to finish the month strong. I normally get really good risk reward returns. So if I get one more trade and it goes in my way, then I'll be back in the positive. But that's pretty much it. My MFF challenge still going on well. Still looking to continue trading. Risk management is on point. So I'm not looking to come out of those markets. The prop firm anytime soon. A friend of mine I called yesterday also passed a challenge. He passed with the $50,000 account. So soon maybe we might think of a way to maybe introduce you guys to him. But shout out to him. He's called Jay, all the way from Uganda, but he's here in Kenya. He studies here. So we'll be introducing him soon. But kudos to him. It's good to see the community and everyone rising together, and we're all passing these challenges and getting funding. So yeah, so that's pretty much it. Do you want to talk about your markets or?
So I also had about 3 trades for this week. So I had one oil position. I had a position on euro yen, which ended quite well. My oil position didn't work out well, and I was also short on the Dow, but the Dow rallied. We had a very explosive rally to the upside. I did not take part in any of the other trades, so I lost about 2% also, which is about $1,000 for my account size. But we are more or less just waiting for the next setups to come, probably this coming week. Now at least we know the direction of the dollar for the short term. So it's more about positioning yourself to benefit from those moves that are coming in the market. So that's what we're going to do. Actually today I'll be analyzing markets and trying to pre-plan myself for the week. So I personally love pre-planning myself for every trading week. I believe if you plan your trades and then you trade your plan, it's very easy to consistently make money and to avoid making emotional mistakes and very many other errors when you're in the market. So that's what I try and aim to do when I'm trading, and that's what I'll be doing today. Yep, but not much from the markets, at least for me.
Okay, cool. So we can talk about a few points that we think that you need. I'll start with the most basic. The first step that you need is, first of all, the first thing that you normally need to do in order to, before you start thinking of even trading full time, is the first thing you need to do is you're going to spend about 5 to 6 to 7 years trading, learning how to trade.
Yep.
I know it sounds long, and many people normally come thinking this will get rich quick. 1 year after this, you're not going to be making consistent returns. Trust you me. You need a lot of unlearning, then learning new things to do. So doing that whole process, then you need experience. Somewhere we're reading, you cannot become a full-time trader or consider yourself a full-time trader and you've never seen a full market cycle. You need to see the up when market is going up. You need to see it going down. I think as we've seen all that, we've experienced it. We've seen oil going to zero. We've seen gold going to new highs at $2,000. We've seen dollar becoming stronger than the euro. We've seen a lot. And we are only 6 years into trading. This is our 6th year, when it ends, right? Yeah. So it's just like education. If you go study any course, you're going to take about 5 to 6 years before you get a degree. Even to further that, if you're going for PhD, masters, you're going even to take even much longer. So if you need mastery in trading and to get consistent returns, like the guy I'm telling you, we'll leave a link below so that you can check it out. And I think we can also do a video later on, not on the podcast, but just a review to show guys how consistent big time traders are trading, so that you get this notion or understanding that this double triple digit returns you're looking to make every month, 100%, 200%. I'm not saying it's impossible, but it's really hard to be aiming for that every month, okay? But these other ones, you just need a lot of education, a lot of time to be kept to understand what you're doing, to understand the skill. Because like I said, and I've talked about this on the different podcasts, my 3 pillars that I normally look to understand markets and to become a good trader is: 1, you need to understand the markets and how markets move. So that's deep. You need to understand technical analysis, fundamental market structure, candlesticks, trends, consolidations, different patterns that form in different stages of the market. So that's very core, very fundamental. That's what you need to know first. Second, you need to come and understand risk management, which will help you not to blow your account, okay? And then and give you proper risk reward measures at the same time, okay? Like I'm saying, the way I saw down, I'm down about 2.5%, but it's easy for me to get one trade and become come back to the profitable side. So good risk management, not to blow account, so to mitigate your downside risk and to maximize on your upside returns. Then 3, psychology. And psychology, I talk about 2 things: the collective mind and the individual mind. You need to understand how people think in crowd mentality, and then you need to understand how people think in individual mindset. And those are 2 types. You need to understand how different people think differently and how you yourself think, and then you approach the market in that perspective. So to me, those are my 3 fundamentals, and that is going to take a lot of time. So anytime before you think of going full time, just understand that if you do not understand any of those 3 pillars deeply, not just having awareness and knowing, okay, I know I need to have proper risk management, because sometimes you'll get greedy, sometimes you get fearful, you risk kidogo, then when you make a return, you've returned a little. Sometimes you get greedy, you're risking too much, such that if you get into a losing streak, your money is really going down faster than you expected. And we keep talking about this. The more you go down, the harder it is to come back up. If you're down 10%, you need to make 11% to break even. If you're down 20%, you need to make 25% to break even. If you're down 50%, you need to make 100% to break even. So the more you're going down, the worse it's becoming.
Paperstone gives you access into the global markets with more trading opportunities, first-class customer service, and peace of mind. Withdrawals are quick, and for those in Kenya, M-Pesa is enabled. Paperstone Markets Kenya is regulated by the Capital Markets Authority. To open an account with Paperstone and begin your trading, click the link on the description below.
So understanding all that scope and then creating a plan, like Ken was saying, without a plan, there's no way you're going. Okay, you need to create a plan, because you'll come and see that different systems, the more you're growing, and I tell my students this a lot, different goals are going to affect your system. So if your system maybe has an average return of, let's say, 5% a month, but you want to do a challenge, and the challenge is needing you to do 10% return. So you're going to sit back on the drawing board and see what you need to tweak. Okay, not to tweak your system, don't change your system too much. You just need the other things you can always sit down and adjust. Okay, like I've shared that on the video that I said about my passing challenge. I had my system was giving me about 2, 3, 4 trades for that month. I'd already exhausted them, the time was about to end, so I had to readjust myself, recreate my plan in order to do that. And that you need to be very flexible. And I remember when I was starting to trade, I never used to be flexible in the market. I used to be so rigid. You remember, Ken, those times when you're saying, ilifikia tu entry yangu kidogo sukuka, I didn't enter. I'm like, I want those perfect entries. Experience will teach you those things cannot happen. Long time I used to risk kidogo. Kina Ken was telling me the other day, hey, my friends, keleanga, I put quite some size when I get something, because I get very few trades, so it only makes sense for me to put a good quantifiable size in terms of risk, but I have my risk parameters that I never go beyond. So this is all going to take experience. So my point number 1 before you ever think of trading full-time is you're going to need to put a lot of time in education and learning how to trade in the Forex market. Okay, so that's my first point.
Yep. So for me, I think first of all, I'll start with what many people don't really understand when they are getting into trading, or rather what I personally didn't understand, but it is written and it's quite common knowledge. In fact, you'll hear people say, this is what you have to do, and this has been written out well. The point is, when you're coming into the markets, the basic idea you have, or the basic goal that you are going to go after, is not to make money, is not to understand how markets work, is not to do anything else. It is to find yourself in that market. Okay, find yourself in that. Every person comes to the markets with different strengths. Jim Simons is a mathematician. He has perfected the art of trading using algorithms based on mathematical principles. He makes a killing in the markets. Ray Dalio is an economist. He's understood how certain environments call for structuring of the portfolio. He's managing on $60 billion. Warren Buffett is a value investor who believes that you buy businesses which are cheap relative to the price which is being sold in the market. He's one of the richest men in this world. Paul Tudor Jones is a technical analyst who believes in coming in and out in a span of less than 3 months. He manages over $28 billion. All these people are looking at markets in different ways. All these people have different opinions about how markets work. I'm a trend follower. Love is a contrarian. We have different schools of thought in how markets work. Now, if you don't have a school of thought, you've not found yourself yet. If you don't have a philosophy around how you think markets work, there's something you're missing. Okay? Some people believe risk is the most important thing, and that is what you should really pay attention to. And they focus much more of their attention there. Others believe, like me, I've recently come to believe that a good hit rate is essential for you to make money consistently, since you avoid deep drawdowns, which can easily distort you psychologically and also financially. So if you're very good at picking trades, you're really saving yourself the garbage of going into deep drawdowns. Like I remember yesterday I was having a conversation with a friend of mine, and he was asking me, okay, how do you manage drawdowns? And I was like, I don't have big drawdowns where I've gotten. I don't have drawdowns of I think the last time I lost more than 5% is quite it's a long time ago. What do? You try to pick the best trades and you try to take risks in the best way possible. For example, like the idea of markets money method, which is if I jump a certain percentage, I'm allowed to risk more in order to make more profit. But if I've lost money, I'm not allowed to risk more. In fact, I should cut my risk as I'm losing money and increase it as I'm making money. Now, such ideas don't come well to someone who's starting out in trading. And if you don't know some of those things, if you have not understood what really works for you as an individual, not what works for Ken, not what works for Caleb, not what works for Warren Buffett, they won't work for you in that way. You get you like, for me, I know all those people, how they trade. I understand the principles behind their trading. I even understand this is the environment for this person to make money. This is not the, like, if you look at someone like Warren Buffett makes money when others probably are not making a lot of money. Like, he does well he's like a defensive stock. Like, he's known for buying stocks which can do well under all environments, whether things are going well or going poorly. He buys those he's not a speculator. He looks for value in something. But if you look like for someone like Ray Dalio, Larry Fink, those are people who believe in tracking capital flows. Where is capital flowing from? Is it flowing from the yen to the dollar? Is it flowing from the dollar to gold? Is it flowing from gold to stocks? Like, how is capital flowing? Because if you understand how capital is flowing around Wall Street, you've basically understood the trends in the market. Because if capital is flowing to a particular asset, a trend is likely to develop in that asset, and the market is likely to rally in a particular direction or move lower. But like, for us, we are technical analysts. I'm not so concerned about the trend as much as I'm a trend follower. I'm in the markets for a very, very short time, such that long-term trends don't really matter that much to me. For me, I'm interested in very, very short-term moves, and I'm out of the market. So I'll take maybe 4, 5, 6 trades in a month, and I'm done. Okay. So I have understood my way of looking at the markets. I have my own approach, which I have formed over the years. And I have adapted from different people some ideas on how markets work. But at least now those ideas have been back tested and also forward tested by me. And based on my experience, I've been able to come up with some ways of which I can look at market and make money consistently. Now, for me, I'd start by saying, if you have not found that thing that works for you, and you have not proven that it works for you, how do you prove? I always tell people that for me, a great trader is someone who's been trading for more than 10 years. A track record which is less than 10 years is not really a great track record for me. You're not in the class of greats, okay? Because if you're trading for an year, you could have luck. You could be trading a bull market. And you're just buying. So you're making money, yes, but when the bear market comes, you lose everything. Okay? And more. You could be trading a very fast market. When the quiet market comes, you lose everything. Now, if you're great, you're adaptable. Fast markets, slow markets, volatile markets, quiet markets, bull markets, bear markets, you can make money in all those environments. Now, you're a great trader. Okay? And you have proven that over a 10-year period. If you're good, you're now not great, you're good. Let's say you have 3-4 years of consistency in the market. Okay? If you're trying to prove something, at least trade for 1 year. Let's see a track record for 1 year where you can say, okay, this year, maybe I started 2022, and by 2022, by the end of 2022, I had made about 25-30% with an average of 3-4% per month. Now you can think about quitting and going into trading. But the idea of jumping into trading, especially, like for us, we're very lucky. The luck we have is we started these things when we were very, very young. We started focusing on trading fully when we were just 20.
Yeah.
So it was very, very easy for me to go by life with 10,000 shillings, 15,000 shillings a month. Because I didn't have bills. My only bill was rent and a few ABCD things. But now where I'm at, I have more bills. I have to sort more bills. Now, if someone is starting out where I am, I wouldn't advise them to jump into trading full-time immediately. In fact, I'd advise them, set aside some time daily, learn some things, trade some ways. Then after some time now, you can jump into it fully. But you jump into it fully without pre-planning some things, without testing some things. Find out what really works for you. That's my first point. My second point would be ensure you have a track record of at least a year plus where you have shown that you can make money. It doesn't mean you made money 12 months out of 12 months, but at least 8 out of 12 months you are positive. If you have 4 losing months, you're quite good at picking your trades. You understand something that you're doing. Maybe you found a method, not maybe, but I bet you found a method. You're good at calibrating your risk reward. And now what you need to improve is to just optimize maybe your risk taking and to perfect some things. But if you jump into markets without finding yourself and without that track record, and it's like you have gone into swimming in the deep end without swimming in the shallow end. Like, your first time you're going into a pool, then someone drops you in the deep end. As much as there's buoyancy which brings you back to float, if you've never been in water, hata hiyo buoyancy ikiwa utakataa kurudi, you'll refuse to, utashindwa come back. So find yourself, at least understand how markets work from your own view, and do not assume you've found yourself because you know how I trade or because you know how Caleb trades. No, finding yourself means you have come up with your own idea of how markets work. If you don't have an idea of how markets work based on your own perspective, you still have to find yourself. Up until then, I don't think you should go into live trading.
Okay, good point. Like Ken said, find yourself. They say if you don't know yourself, the market is the most expensive place to find it out. And unfortunately, I think we all have to pay that price. There's no easy way out. You can't just come in and say, okay,
cheat.
You can't cheat that process. And we normally talk about this, and we talked about it in the last video. Experience. You cannot substitute experience in trading. There's some things these days, there's some trades we won't take even if they go to target because of the experience you've had in the market. You know that it's a trade, but it's not those good types of trades. Okay, so you try and avoid, like Ken was saying, selectivity, looking for quality over quantity. And that's what I also teach in my class. Quality over quantity is the best. The more quantity you have, the harder it's going to be. You're looking for more trades, you're analyzing more markets, more risk you're taking, more setups you're seeing, and the market is very good at fooling you, because the patterns that you're seeing most often might not even work. So you need to reduce the number of trades and become very, very selective. Okay, but to my point, maybe my last point for today is, and we keep talking about it a lot, capital. You cannot go full time and you have 100,000 Kenya shillings. Even trust you me, 1 million Kenya shillings is also hard. That's about $10,000. So we're kind of raising the bar. Okay, trading full time. Remember, you're trading full time. Like Ken said, you're having 4 months in a year that you're down, and let's say you had those 4 months in a row. If you have $10,000 and you make 10%, that's nice. You made 100,000 for January.
Yeah.
But now let's say February, March, April, May, you lose 2, which is very good. You've lost 2%. You're still up for the year.
Yeah.
You lost 2, that's 8% in 4 months following each other. Now, with that 100,000 Kenya shillings of yours, do you think you have any money left?
Paperstone is an award-winning online global Forex and CFD broker. It offers unparalleled service, exceptional pricing, and quick execution speed.
No.
Yeah, you had spent most of it even. Maybe you celebrated. You're like, I made money. Let me celebrate. You think next month will be the same. So that's why I'm saying $10,000 is still a little. But now when you're talking about $100,000, $200,000, now you're starting to talk about trading big time. Because if you have $100,000 and you make that 10%, you have $1 million Kenya shillings. That's about $10,000.
Yep.
That won't even if the next few months you're down in this economy, this country, anywhere, almost anywhere in the world. Even abroad, people are not paid $10,000 a month. Okay, so anywhere in the world, with that amount of money, if you're living below your means, okay, then you can survive. And that's when you need that capital. You cannot become fully trading full time without any money. So if you're thinking of dropping out of school, if you're thinking of dropping out of college, if you're thinking of dropping your job, telling your boss next week you're going to quit because last month you made 100,000, think twice. You need a lot more capital, a lot more experience still. Because just because you made 10%, 3 months in a row doesn't mean you're already good. You can still have another month you're down 10. Yep. So capital. And like I was saying, these days you can use, like on our link below, we have our link for our MFF challenge, my Forex fund. If you want to trade those types of capital, click on the link below. Go and check out those packages that they have, the ones that we're doing. They offer minimum from $5,000, which you can use as practice, to maximum. Did they remove the 300,000? Are you still there?
Did they remove that?
$300,000 account.
It's still there.
Maximum to about $300,000 account. If you get funded $300,000, you have your clean 30 million.
Yeah.
If you're making a 10% return, you have 3 million. Of course, they'll take the percentage, but you'll still have over 2 million from that money. So you see, we're all talking about size. I'm not talking about trying to double my money and make 100%, 3-digit returns every month in, month out. If I do, the better. But that's not what I'm aiming for. If markets are really bullish and I'm in that trend and it goes in my way and I make 50% in one trade, well and good. But at the end of the day, I'm not looking to do that. At the end of the day, I'm looking for consistent return. Because if you're looking to raise money in the future, like what you'll see from the link that I've shared below from the guy from myfxbook, he's called Lux. His real name is Marcellus Darham. If you look at that guy, how he's trading, he started with how much?
$2,000.
And now he's trading
$5 million.
Exactly. And that was in
2019.
Exactly. So 4 years down the line, if you look at that track record, stellar returns. I'll do a separate video on this one to break down different traders that we're following who are doing exceptionally well. And look at that return. He started with a deposit of $2,348, if I'm to be detailed. And right now he just surpassed $5 million the other day. He made $300,000 in 1 hour, which is about 30 million. When was that? Was it Monday or Tuesday? I think it was Tuesday. Yeah. So you see, this guy just started. He started with his own capital, got consistency. Investors saw that, gave him more money and more money and more money. So in that $5 million fund that he has, 2.5 is for investors, the other 2.5 is his. So he's grown his money from $2,000 all the way to 2.5 million. And all he's looking for is consistent returns and then capital.
Yeah.
Just that. Trading, you don't need a lot. Then simplicity. Quality trades. If you have a trade, take a trade. If you don't have, don't take. You'll see from that guy, the types of trades he's taken. He's only taken 3 trades this month. Yeah. And he's up more than 8% for this month. No, 13. Yeah, he closed at 13% for this month. Imagine, only 3 trades. Meaning he's having a good risk-reward ratio of about 1:4. So all of them worked out well. He's made his good money. So those are the things we're talking about. Get good capital, then start looking for get consistency, then start looking for good capital and start trading that size. At the end of the day, you, my friend, you won't be stressing yourself much. You'll be trading consistently and making a lot more money than you expect to make. The guy who's looking for triple-digit returns, you'll find actually that the guy who's making 10% return consistently is making much more money than that guy who's looking for making 100%. Because an investor who'll come and see an account, if he looks at 2 different accounts and see someone who's made 10% 1 year, and then he looks at another one who's made 100, then down 50, then up 20, then down 10, then up 80%, it clearly shows that this guy doesn't know what he's doing. Okay, he has random returns, meaning he's getting random trades, but this other person is doing the same thing over and over and over consistently, and that's what is needed in trading, because trading is just like an extreme sport. Do the same thing. You show up for training. You Kawen is striker. We're seeing how, shout out to Haaland, he's played an exceptionally good year this year. Shout out to people like the guy who won Ballon d'Or, Benzema. Consistency. To get to that level is not that he this month is looking to make 100 goals, then next month I may reduce consistent returns. So I think what came to mind was giving that. Look at Kipchoge. Consistency. When he's running, he's not looking to increase his speed, then reduce, increase. Just consistent. So consistency is something that will always pan out in all careers. Whatever career you're talking about, you're always going to need consistency. So yeah, so that's my last point.
Yep. So to just build up on what you were saying, actually on the consistency and discipline side, I think also when you're learning to trade, the hardest thing is we're not saying that it will take you 5 years to make your first profit or 6 years. No. Making money, you'll start making even after the first 6 months, you'll make some money. But consistently making money, consistently growing that income, and consistently being confident that you can extract profits out of markets, that will take you some time. If you want to understand some of these things, I think the best thing that we can do, like I personally, I'm a big believer in something called modeling. Modeling, the basic idea behind modeling is you can imitate or you can copy something. In fact, one of the tenets of modeling, which is, there's something called NLP. NLP is neuro-linguistic programming. And the basic idea behind neuro-linguistic programming is if someone can do it, anyone can do it. What we basically mean is we can model what someone did. Like if good traders are doing it, you can also do it. And how can you do it? You just need to model 3 things. What are the beliefs of these people? What are their mental states? And what are their mental strategies? You can do more research on those. Now, one of the beliefs that you have to really, really come and accept is you need to sort your bills in an annual basis if you're going to be trading markets. If you're starting out in trading, that will be a bit hard. But if you want to venture out into full-time trading, like Caleb was saying, I don't see a struggle with you deciding that, listen, if my rent is, let's say, $700, which is about 70K, I use this amount on fuel, I use this amount on food, I pay this much on rent, I have these allowances. So let's say you're living off $3,000, $4,000 a month. If you extrapolate for a whole year, that's about $48,000. So you need to have somewhere around $50,000 just put for you to venture out into full-time trading. If you have stored that money in your bank account, that means as you're trading, you don't have pressure to make money week by week, day by day. Because there are times when your system will be off with the markets. Like for me, I know sideways markets don't really work well with my system. So anytime markets start moving sideways, I know I'm going to be out of the markets for quite some time. And if I'm going to be out of the markets for quite some time, it doesn't necessarily mean that I'm avoiding making money or I'm missing out on making money. In fact, I'm avoiding losing money. So it's a very, very wise thing for me to stay out until there's something that makes sense for me to come back in the markets. You must develop that patience. You must be able to tame your mind and to develop that patience to be able to wait patiently until there's something clear that you can do in the markets. Now, if you don't have money that is somewhere that can sort your bills, you can't be patient because you know you have bills to sort by the end of the month. You have certain things that you'd love to put aside for the end of the month. I'd advise you, if you want to venture out into full-time trading, make sure you have enough money for the whole year, or at least you have another source of income. So if you have enough money for the whole year, then it becomes very easy now for you to carry that forward, because during that year, when you have sorted your bills, the amount of money you make, you'll again put it for the next year. So you'll find that the simple thing that I'm trying to pass along is, as a trader, it's wiser for you not to look at your bills on a monthly basis, but to look at your bills on an annual basis. Always ask yourself, the money that I have, can it sustain me for a full year?
Yeah.
If it can't, maybe you need to go back to the drawing board. If it can, maybe you have figured out some things. Because I also think, and I tend to believe, that trading is more about wealth creation rather than just, if you even look at big banks and big investment banks, these people are in the business of wealth preservation and wealth creation. We are not in the business of making money to just eat. We are creating wealth. What that means is you have gone beyond some certain thresholds, like you have been able to put aside money enough for you to go beyond certain thresholds before you can jump into other things. So what you're basically trying to say is you'll still be trading those early years, you'll still be looking at markets, you'll still be journaling, trying to find out what really works for you. but you won't be trading as the only source of income at that point. And you can only cross to the other side, or would advise you at least to cross to the other side if you have money somewhere for a whole year. That will really save you on a lot. But this idea of you can trade, if you're trading anything less than $100, by the way, you're wasting, I think, time and energy. $10, $20. That's not professional trading. Don't tell us you're doing trading as a career. You can tell us you have a thing you always do on the side, which is you look at these candles and you try and make 100, 200 bob, but that's not trading. The trading is it only works if you have some levels of income, and you have to be serious about it if you're planning on doing it professionally. But if it's a hobby, you can do it with $10, $20. You don't even need to add more money, by the way, because by the end of the day you lose it. But if you are serious about pursuing trading as a profession, like that's what we have always tried to pass along to people. If you're not willing to pursue trading as a profession, you could give your money to someone to manage it, a licensed money manager. They could do that job and do it well, rather than you trying. Because there's this fallacy that everyone is good at investing. That's not true. There are very few people who understand how to invest money. As much as you're a good engineer, a good pilot, a great doctor, that does not mean you're a good investor. A good investor, a great one, has focused all his efforts in how he can make $1, $2, or $3. That's the job of a trader. It's a full-time job. It's not a part-time job. So if you're going to do it, you have to be able to plan yourself, and you have to understand the rules of the game and how the game is played. So that's what I'd say is my final point. That idea was actually passed along to us by Michael Gitonga. So he told us, as you plan on moving forward, make sure you sort your bills on an annual basis. That will really save you the headache of, like him, he's not made money now for about 2-3 months, and we have not seen him change his lifestyle or any tenants complain or anything. He's been able to sustain his lifestyle quite well. Now if you 1 month ukikosa kulipwa unaanzanga kupigia watu nitumie hapa nitumie pale, clearly you've not sorted your financial, you've not put your financial house in order, and you need to work on that. It's not bad, you just need to work on it before you can jump into trading full time. So I think with all that said, we will stop there for today. We decided to have a very short episode for today to just shed some light on some things. We have some guests which are lined up, or who are lined up, so we will be sharing with you more episodes with our guests, especially those who are trading markets. And also, if you have any topic suggestions or ideas you'd love covered in the podcast, feel free to reach out to us and suggest any topic. So I think I'll stop there. We'll catch up next time.
Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.